Ladies and gentlemen, please welcome your 2025 Strategic Planning Committee Chair, Tammy Cheryl Short.
Hi, everyone. Thank you so much for being here. These Emerging Issues Forums are a program of the Strategic Planning Committee, which I have the pleasure of chairing this year, along with Dan Hartman, who's my vice chair. We are looking forward to developing a new plan later this summer and need your help. On the screen is a QR code to an all-member survey. The real estate consulting group T360 is conducting this for us to provide the latest information about the value of our programs and services directly from our members. If you have not taken it yet, please scan the code or visit the site now and share your feedback. It's open through Friday only, so thank you in advance for sharing your feedback, and we are selecting winners each week, and have a chance to win a $150 American Express gift card. It is very important, so please fill that out for us when you have a chance between now and Friday. The content of today's Emerging Issue Forum comes directly from member feedback. As you know, the landscape for homeownership is constantly changing, and we as realtors must strive every day to help our clients be prepared to maintain and protect their homes. In that area of protection, today we are going to be discussing home insurance. Our goal today is to hopefully clarify details about home insurance, best ways to navigate the current nature of insuring homes, and how realtors can be advocates for our clients in finding the best homeowner policies. To help us do that, we are pleased to be joined by Missouri Department of Commerce and Insurance Director Angela Nelson and NAR Senior Policy Representative for Insurance Austin Perez. Director Nelson has extensive experience that encompasses multiple facets of the insurance sector, having served as an agent, a regulator, and executive. From 2002 to 2020, she played a pivotal role within the very department she now oversees, holding several key positions. Notably, she was the division director of the Insurance Consumer Affairs Division from 2009 to 2012, directing the department's response to the devastating Joplin tornado. Following that role, she led the Market Regulation Division from 2012 to 2020, navigating complex regulatory landscapes and advocating for Missouri consumers. Austin is NAR's public policy expert on federal insurance matters, including flood, home, and property insurance. He is also a staff director to NAR's Member Insurance Committee, which develops the association's positions on insurance and related public policies. Austin joined NAR in 2008 after advising on labor and immigration policies for the American Farm Bureau and environmental issues from the U.S. Small Business Administration and the White House Office of Management Budget. Please join me in welcoming them both today. Before we begin with our questions, we have asked Angie and Austin, which we're on a first-name basis now, to help us with information to help frame our dialogue. We'll have Angie go first, and then Austin.
Great. Well, thank you all for inviting me and allowing me to be here with you today. As I told Tammy and Austin, there is nothing an insurance person likes more than being asked to talk about insurance, because nobody ever wants to listen to us talk about insurance. So I hope you will forgive my glee at being here with you today, but I am truly happy to be here with you. I've got a few slides that I just wanted to walk through to give you all a sense of the state of the landscape and the environment here in the state of Missouri as it pertains to homeowners insurance specifically. First, a little bit about the department. How many of you knew there was a Department of Commerce and Insurance? Hands up. Okay, well, this is really sad for me, and I'll tell you why in a second. But I have been at the helm of the department since March 1st. I was appointed by Governor Mike Kehoe. Very happy to be here. We are actually made up of 9 divisions, and this is why I'm going to really call into question your all's licenses as realtors, because your licenses come from our department. It comes from the Division of Professional Registration and the Board of Realtors. So you know now that the Department of Commerce and Insurance is more than just insurance. We are banks, credit unions, the Division of Professional Registration, which has 41 different boards that license and regulate over 550,000 Missourians, including yourselves. We also have the Public Service Commission, which regulates all investor-owned utilities in the state of Missouri. So we are a big department. We've got about 770 folks that work for us down in Jefferson City, and I'm very honored to lead them. At a very core of what we do is we are a consumer protection agency, but you know us as regulators, so we regulate and obviously oversee not only the insurance industry, the state chartered banks, state chartered credit unions, professional licensees, as well as public utilities. But the piece that I'm most happy to be here with you and highlight and hopefully make you realize something new is that part of what we do, particularly in the insurance divisions, is we're here to educate and advocate for Missourians. So part of what we do every day is to talk to Missourians, talk to them about insurance problems that they're having, concerns that they have, educate them about insurance products to help them become better consumers. So if there's anything you take away from today, I hope that that's the one piece. I'm not going to bore you with all this stuff. This is stuff my staff just put together, so I always have it handy for me. But just a little bit, again, about specifically what we do on the insurance side. So for the Consumer Affairs Division, what we do is we investigate complaints against insurance companies and insurance agents. And I don't know that people know that. So if you have, for instance, an auto claim or a homeowner's claim, you're having trouble with your insurance company, for free, you can file a complaint with our department. We will examine how the insurance company handled your situation. If they have violated the policy, if they have violated any state law, we will get them to make it right for you. If it's a situation of an auto insurance claim, for instance, and it's a question of liability, we're not a court, so I can't make a determination and tell them what they have to pay, but we can mediate those for folks, and again, free of charge. So just in 2024, our Consumer Affairs team had a record-breaking year for us. They recovered nearly $23 million on behalf of Missouri consumers. And I shared with Tammy and with Austin beforehand, my staff actually came to me and brought me a success story just earlier today, where for a business, we were able to recover an additional $3 million. So these are real numbers that we deal with. And again, these are services that we provide free to the public. So if you didn't know it, Missouri is here in the little middle of the country, and not everybody thinks of us except as flyover country. But in the insurance world, we're kind of a big deal. And I say that for a number of different reasons. Folks also don't realize that Missouri is a big deal because we're the only state in the U.S. that has not one, but two Federal Reserve banks. Yep, Kansas City and St. Louis. We also are the home to the world's largest global insurance market, the Standard Setting Regulator Association, an association I'm actually a part of, the National Association of Insurance Commissioners, is also headquartered in Kansas City. So when it comes to the financial services sector, Missouri is very much a big deal. And we have, just to give you a perception or an idea of how big we are, Missouri is usually about 24th or 25th in terms of population, per capita income, all those things. We're usually bellwether right in the middle of the country. But when it comes to the number of domestic insurance companies that we have, these are insurance companies that are created and licensed, legally organized in the state of Missouri. We have 181 of those. So we are the 9th largest in the US. The total number of licensed insurance companies who have a license in this state to sell insurance is 1,764. That makes us the 12th largest in the US. Why are those things important to me as an insurance commissioner? The single best consumer protection I can offer consumers of this state is to have competitive insurance markets. So the more insurance companies that we have providing products and services in our state, every consumer benefits. We have about $53 billion in homeowners premium. Again, we're about 20th in the country. For homeowners premium, right at $2.7 billion, which puts us about at 17th in terms of size. A little more specifics about the homeowners market. You may not know this, but there were approximately 1.3 million insured homes. That doesn't account apartments or condos. That's just literally single-family dwelling homes. The average premium in 2023 in the state of Missouri was $1,872. Now, we collect a lot of data and statistics. I can tell you by zip code what the average premiums are. I will not bore you with that information, but I will tell you very interestingly that Camden County here in Missouri actually has the highest average annual premium, and they're sitting at $2,286 a year. So yay, Camden County. I guess we got some Camden County folks.
Yeah.
So when we talk about insurance, there's a couple things that we talk about in terms of losses. And one is loss frequency, the other is loss severity. Frequency is just like it sounds like. It's the number of claims. The frequency or how often claims are occurring. And what we saw in 2023 is that homeowners claims, the frequency of those jumped 9.2% in 1 year in 2023. And I'm going to get you guys oriented by the end of this presentation that when I say claims and losses, just put an equal sign to premium. Claims equals premium. So jump 9.2%. We had approximately 125,000 claims in 2023. The average claim size was $16,635. The last piece of information I hope you take away from today is what's called a loss ratio. Simply put, a loss ratio means that for every dollar of premium that an insurance company collects, how much are they paying on claims? Not overhead, not expenses, not marketing, not salaries, not anything, pure claims. And in 2023 in the state of Missouri, insurance companies paid out 82 cents on every dollar they collected for claims, which means there was 18% to pay for taxes, administrative overhead, electricity, all those other things. It was not a good year. Not a good year. I'm not going to bore you with a lot of these pie charts. I'm just going to tell you what the story is. And this is a good story for us. This tells you the number of insurance companies that have been writing homeowners insurance with more than $1 million of premium over the last 10 years. And if you notice on that pie or that bar graph there, it's very stable. We hover right around 100 every year. And that again is a very good thing. We've got a very stable market here in Missouri. The average annual premium, again, going back over a 10-year period, you will see that we've got two things going on here. The blue bars are telling you what the actual premium, average annual premium in dollars is. The red line is showing you how that looks if it's adjusted for inflation. So you'll see overall we're very slow and steady, but we've got a nice little uptick that started kicking up there in about 2020. And I apologize, I thought this would display a little bit better than it actually did, but really the story of this one is trying to give you in this heat map an idea of what the average premium is by county in the state of Missouri. So the darker blue counties are approaching that $2,286 where we saw Camden County, bullseye right there, you'll see it in the darkest blue. And the lighter blue is showing you where the lower end of the average annual premiums are, and that's approaching $1,421. Typically, what we would expect is that the rural areas, even though you would expect there be lower property values, the insurance actually becomes a little bit more expensive because there's not a lot of fire protection districts out in those rural areas, and that tends to drive insurance rates up dramatically. But as you'll see here, we are seeing that the urban centers of our state actually are having a little bit higher homeowners premiums. This is another heat map that is trying to take that average median income in the state of Missouri and overlaying that with an average premium. And so what that shows you is on the blue side, you're looking at roughly a 2% of their median income is spent on homeowners insurance. Those areas up on that brighter orange are approaching just over 5%. So again, not surprising to me is that a lot of our areas that have maybe some more challenges in terms of affordability would be in those rural areas of the state where we obviously know that they have a little bit lower average median income. Again, this is just showing you sort of what we're seeing in terms of losses. And again, the story, the takeaway from this one is, look, we've got a little bit of volatility over the last 10 years, but really focus on 2023. We had a very bad year in 2023. And again, this is showing the average claim size, which is about $16,000, but you'll see it hasn't budged very much over the last 10 years. Earthquake is something that we as a department are very concerned about. You may not know this, but Missouri actually has the 4th largest earthquake insurance market in the country. Yeah, 4th. It's this little thing called the New Madrid seismic zone down there in the Boot Heel. And so what we have seen over time is obviously premiums are going up there as well, even though we haven't had an earthquake. That's due to some global reinsurance matters. But you'll see there that the average premium statewide is still roughly at about $250 a year. If you're in the Boot Heel, you know that that is a lot more expensive where you are. But on an average basis across the state, it's still relatively affordable. The bad news is that we've seen the take-up rate for insurance dramatically decrease over time. Apparently back in the year 2000, the take-up rate was about 60%. And so now we're sitting right below 30%. And as an insurance commissioner, that troubles me because with earthquake, it's not a question of if one happens, it's a question of when. And so my primary concern is how is the state going to recover when only 30% of our homeowners have the financial means to recover? And that's the thing that keeps me up at night. Again, as we're talking about homeowners insurance, I'm telling you all these things about losses, and I swear I will make it all make sense to you. But to show you what is really driving homeowners rates, you again have to talk about what are the losses that we're seeing. And you may not know this, but homeowners insurance actually started out as fire insurance. That's where it actually all began, was a fire insurance policy. Over the decades, we added additional coverages to that, and it became now a much more broad and comprehensive package of coverage that we all now know as homeowners. But fire is the one thing that we know how to price as an insurance industry. We've known it for a long period of time. It's consistent. So you'll see there that fire and lightning only encompasses 14% of our claims in 2023, but wind and hail, 67%. So if you were to look at just what we know has historically been covered by these insurance policies, which is fire and lightning, and compare that just to wind and hail, then that chart starts to look a lot more like this. And again, what you're going to see there, or you do see, is that dramatic spike between 2022 and 2023. So, I know you guys have all heard that there's this little problem with homeowners insurance rates that have been increasing. I'm sure no one's not heard that before, right? We are also aware of that. And there's a lot of reasons for that. We have increasing construction costs. The number one thing that drives homeowners insurance premiums is how much will it cost to rebuild your home if it's totally destroyed. So if the cost of supplies, labor go up, the cost to replace it goes up. That automatically drives those rates up. We also have a phenomenon where we have really started to really love our luxuries in our home. Nobody wants to have just Formica cabinets or countertops anymore. They don't want to have just regular stock cabinets. Everybody has to have tile floors, wood floors, granite countertops, quartz countertops. Well, guess what? That means all of our reconstruction costs are going up too. So that's probably one of the bigger components to it. But more than anything else, I will tell you guys, in this state in particular, we have had an increasing number of what we call convective storms. And that is just the really nasty thunderstorms. It doesn't have to be a Joplin-sized tornado to cause havoc. We are seeing way more, way bigger, way stronger thunderstorm activity across our state. It's happening more and more frequently, and it's absolutely devastating the insurance industry. Through these storms, we are seeing increasing amounts of hail and windstorm damage to siding and roofs. A hot button issue for us as regulators is people who don't like the fact that some insurance companies use drones for home inspections. So that is something that we're very much watching. There's a lot of coverage changes that are taking place because as these convective storms are driving more losses, insurance companies want to know better what they're insuring before they actually get and write the risk. So drones are an increasingly part of it. We're seeing a lot of coverage changes. We're also seeing a lot more exclusions and increases in deductibles, right? And those are all ways that insurance companies are trying to manage that risk. So those are all things that we as regulators across the country are watching. But again, these are things that are top of mind for me here in the state of Missouri. So Tammy, I'm going to pause it with that because that's really kind of the limited background that I thought I would just share with you all. And that's how you reach us, by the way.
Thank you so much. Good evening. So thank you very much for the opportunity. Being the insurance nerd at the National Association of Realtors, normally I'll get questions from Florida, Louisiana, California. So it's truly a pleasure to be in Missouri here. So thank you very much. I'm glad to be here. Okay, so I think your commissioner, by the way, if you don't have her on speed dial, you need to have her on speed dial. That's going to be a takeaway here. Did a great job of explaining, but let me provide the national perspective.
Sorry.
No problem. All right, so let's start the problem. Home insurance costs and availability are becoming major issues in Washington, D.C. Congress is not likely to create a new insurance program, federal insurance program. The states do a great job of regulating insurance as it is. There is an option, a good option, which is to bring down the risk, make safe homes more affordable through hardening homes against natural disasters. There's plenty of programs. I'm going to talk a little bit about them from the federal government. We need to beef up those programs. That's really the answer. But what you need to know is that rising insurance prices are due to the increasing costs of insuring homes in certain areas. So with federal government assistance, if you can help reduce the cost of insuring homes, insurance rates will come down. A bit of Insurance 101. An insurance contract is not like a real estate contract, or a broker, a seller's agreement, a buyer's rep agreement. It's an IOU, where an insurance company offers to cover a large upfront cost if something unexpected happens, and in exchange, the consumer pays a steady stream of payments monthly or annually over time. It's not like a piggy bank that you put in and you're able to draw out. It's a good year when you don't pay out of the bank account on this IOU. In order to survive, insurance companies must be able to pay out on all contracts at once. And they cannot set their own prices. How they survive is by selling more policies, making smart investments, including in the real estate market, and using reinsurance to spread their risk to hedge their bets. So if you have an insurer that stops writing a policy, it means that they have done everything they can to make ends meet, and they're not able to do so. The only way for them to keep from going insolvent is to exit the market, and that's what you've been seeing in places like California and Florida. All right, so here's an example. Insurers, as a result of increasing natural disaster costs over time, are shifting more of their policies to lower risk areas, or they're trying to sell policies in more lower risk areas. You can't get any more lower risk than Biltmore Village in the mountains of North Carolina. This is Asheville, North Carolina. Looking at the screen, the top left corner, that's Asheville right there. Mountains, literally 3,000 feet of elevation. Once actually recorded as safe by FEMA. FEMA does a risk analysis of the entire country. This area was zero risk. This was the flood that occurred last year. So a lot of insurance companies looking for lower cost areas went into the mountains, but they are literally running for the hills, and they are finding these places where entire communities in the mountains are now being washed away. So we talked about, Angela did a great job, the loss ratio. I'm going to give you one more ratio. It's called the combined ratio. This is for every dollar in premium, how much does the insurance company pay out, total claims and expenses. So what you can see over the last 5 years, roughly, home insurance companies losing money. 2023, you can see that for every dollar of premium that was collected by a home insurance company, they paid out $1.11. Insurance company, they can hang in for a while, but the thing that you need to see is they're not able to cover their costs. And like any other business, if they can't cover their costs, they're going to have to eventually exit. All right, so what is the solution? I'm here from Washington, D.C. I'm here to help. And here's, I guess, a couple of options to consider. All right, so option one, keep it at the state level. I think that the state regulators, including Angela, have shown they have kept rates affordable. I think the challenge is that in some states, they've put too much emphasis on affordability so that some insurance companies are not able to cover their costs, and so they exit the market. So while they're trying to address affordability, the flip side is they're making it less available in those states. So some states are doing a better job than others, and it's sort of varying across time and space. Another thing is that you're seeing a very large jump in insurers of last resort. These are state-backed, essentially state-backed pools of private insurance companies. We're going to talk a little bit more about the FAIR Plan in Missouri, but it's basically where do you go when you can't find any insurance company to write you? So it's a pool, there's tacit support. A lot of these programs are ballooning, and they're not charging enough, so there's a lot of exposure there, and this is becoming an increasing issue. So on the one hand, states are making it more affordable, but they're maybe making it less available, and there might be some risk and exposure coming. Just to emphasize affordability, if you look across the country, you can see Missouri's about middle of the road, whereas you look at Florida's got the highest premiums relative to income, and you've got Utah at the lowest, and you see that there's a roughly 2% average. If the federal government were doing this, if FEMA were doing this, I can guarantee you it'd be much higher. Mm-hmm. All right, option two, create a federal insurance program, but for all natural disasters, everything, floods, earthquakes, wildfires, et cetera. We did an analysis of this. So the benefit, this is not a new idea. So the benefit is it will make it available. We've seen that with the National Flood Insurance Program. The challenge is that in order to build up a large enough fund, in order to make it affordable, you're going to have to do things like charge full risk rates, which is not always being charged at the state level. So rates are going to have to go up for a lot of people. We found that if one example, 98% of homeowners across America would pay about $500 to $1,000 more for the total cost of their home insurance under a program like this. So that the 2% in the riskiest areas around the country, flood riskiest areas around the country, could pay a little bit less. So most rates would go up as a result of it, but it would be available. It will also encourage high-risk development. So when you're qualifying for a mortgage and you're qualifying based upon a subsidized rate, so you're paying maybe 50% of your true risk cost, you're qualifying for that mortgage based on an insurance rate that has to go up 100%, mathematically speaking, in order to cover costs. A lot of people who are getting into those homes on a subsidized rate, they don't know that. That's exposure for you. So full risk rate is actually not a bad thing because it allows consumers to make an informed decision up front about the total cost of owning the home, including the insurance. This study from Milliman, and we provided this to you, and I'm going to give you a link to it. It's a very intricate, detailed study. It's the first of its kind. We went to our board of directors in order to pay for this. It was a very expensive study. We are the only ones have done an evaluation, a serious cost-benefit analysis of what a federal all perils natural disaster program would be, something we're very proud of, and we hope you are too. So the last option here, federal grants to help communities and homeowners build stronger. And again, I mentioned that the less expensive it is to insure a property in high risk, the less an insurance company is going to have to charge you. And there are lots of federal government, federal agency programs that are providing grants, loans, federal assistance in order to elevate your property, put on storm roofs, storm shutters, clear defensible space to prevent against a wildfire, to reduce incendiary sources around your home. So those are the kinds of things we're doing. So What is NER doing? We are building, NER is working with the National Association of Mutual Insurance Companies, NAMIC. This is one of the big insurance trade associations in Washington, D.C. And what we're trying to do is build a coalition, housing and insurance and financial services group, around a group of bills that would help bring down the total risk and cost of insuring homes across America, under the theory that if more people build stronger, safer, then insurance companies are going to be able to charge less, which means that insurance regulators will have to approve less increases over time. So we've got a list. I've got something for single-family homes. I got something for forestry. One of the areas I hear a lot about is condo and home associations, and I know we're going to talk a little bit more about that. We're going to need your help. Like, what does that legislation look like in Washington, D.C.? And you can see on the left is sort of the beginning of what that leave behind piece going to Congress, asking them to pass 6 bills to help bring down home insurance costs. So this is not going to be a light lift. This is not going to be easy. Money is tight in Washington. These programs cost money. There are going to need to be reforms to make sure the money's going to the less fortunate, those on the lower end of the economic scale. But we're committed to try to find a solution here, and so that's what we're doing for you. I'll mention here that we have some resources, and again, this is going to be available to you. We provided consumer guides, guidance, fact sheets, things that give you tips. We have multiple websites for you explaining everything from flood to fire to home insurance. And I'm always happy to talk insurance. I'm an insurance nerd that way. I'm one of the few people at NER that gets excited about insurance. So if you want to pick up the phone and call me, I don't mind. You can have my cell phone, my email. I know that Tammy has my information. So please, happy to have this conversation for you, and I look forward to the questions.
All right, thank you, Austin. Thank you, Director. You have done a great job with slides and these presentations, but if we can revisit some of the questions, because we all are realtors, we get some of these questions all the time. We don't have the stats always in our head, right? Of course. So let's go back and talk a little bit about the raising of rates and canceling. And we have so many people who now are struggling with, they really need to replace the roof, but they know their insurance premiums are going to go up, and they don't want to be canceled. So can you speak to that a little bit about the pull and push on that?
Oh gosh, yes. And so if I can, I'm going to go back to just pick up on one thing that Austin said that I'm going to add to it, and then I promise I'll answer the question.
Okay.
The one thing that I would add for us here in Missouri that I will add to Austin's mitigation slide is that Missouri does not have a statewide building code. That puts us at a significant disadvantage, because when you talk about things like hurricane clips, we're not in hurricane zone, but those hurricane clips going on a roof are somewhere like, I want to say 50 cents a clip. But it helped keep the roof on if there's a severe thunderstorm. There's brackets that you can put on a slab foundation to ensure that the 2x4s or 2x6 frames will stay put and not blow off in a strong 90 to 110 mile per hour windstorm. We haven't in this state even done the basics of that. And I think, honestly, this is a great potential partnership between our department, the insurance industry, and the Realtors Association, where we could make a real difference. And that absolutely would have an impact on insurance claims in this state and bring down costs. So just to put a pin in that. Policies, rate increases, and cancellations. So first off, in the state of Missouri, we do not have approval authority over rates. It is a system that we call use and file. So insurance companies can be using rates for 10 days and then submit a filing to us to review. They do have to demonstrate to us a few different things. They have to prove to us, as we like to say, show me, since we're here in the show me state, that rates are not excessive, inadequate, or unfairly discriminatory. We also, to blow apart a myth that gets out there, will never allow an insurance company to recoup for past storms in a prior year. 1, never will happen. 2, we will never allow an insurance company to use losses in another state to justify rate increases in this state. So you commonly hear how insurance companies are going to raise your rates because they're trying to recoup what they paid in Florida. Not true. They have to use data in this state. The basic principle for how they develop rates is they don't have a crystal ball. So what do? They go back and they look at the last 3 or 5 years of claims data. They kind of try to adjust that for what they think the inflationary trends are. They come up with a pot. Then they go and divide that by every dollar of home replacement cost. And that's how they get to the core of it. And then everybody's gets modified up and down by territory. And, if you have a sprinkler system or if you have, a new roof, all those things are adjusted. But at the end of the day, that's kind of the core concept that I want you to get, is that they're taking past losses in this state to project and estimate what the next year's claims are going to be. That's what premiums are based on. So just so you kind of have that deal. We do, I think, one of the better jobs at, despite not having true approval authority, of really putting the companies through the ringer and making sure that they do demonstrate to us that any rate increases they're putting through are not excessive. Obviously, you guys don't worry about inadequate, but I do. Excessive, inadequate, or unfairly discriminatory. We know there's a lot of cancellations that are going on. Particularly, this is, I think, a sensitive issue. For instance, when you get a quote and they bind coverage, an insurance company has an additional 60 days to inspect and basically underwrite that property. So I know that you can come into circumstances where they'll bind coverage and then perhaps send an inspector out and discover that the roof is 35 or 45 years old, and then they will cancel it. That is an issue. We try our very best to encourage companies to make sure that they are doing their full underwriting before they bind coverage. But to be honest with you, in many circumstances, they're getting a call and someone needs coverage bound today. And so they're trying their best to get that coverage bound for that person today. And so those circumstances do crop up. I would encourage you, if you're selling a home to a new home buyer, make sure that they're reaching out to their insurance company as early as possible in the process. We talked about this before. Help them find out the age of the roof, because that is one key point an insurance company is going to want to know. How old is that roof? I showed you with wind and hail claims, #1 pressure point. That's a single focus of insurance companies. Tell them to call for that quote and tell them up front how old that roof is. If there's going to be a surprise, you're going to get it early. You're not going to get it when you're 2 days away from a closing. So, Tammy, those are a couple things that I would throw out just as help.
Okay.
If I could add to that,
Sure.
or just provide the
Sure.
national perspective on this. So Federal Insurance Office is a small office in the Treasury Department. They worked with the National Association of Insurance Commissioners, which is like NER, but for all the state insurance commissioners, including Missouri. And what they did is they basically gathered about 5 years of information. They looked at 425 million home insurance policies. They had very granular data down to the zip code level. What they found over that 5-year period is that rates were going up about 8% over that 5-year period. And non-renewals and cancellations was down at about 1%. So yes, rates are going up, but you can't pick up a newspaper without, skyrocketing double digits rates. So I'm a data nerd. I'm a policy analyst, right? So whenever I have someone approach me with the concern, the first thing I do is I look to the data. And so, I once had this professor who would tell me a day without a spreadsheet is like a day without sunshine. So the challenge is that there's not a lot of data in this space, but FIO, together with the state insurance regulators, has produced this data set. So as we sort of have a conversation, it's important to ground the discussions in the data. I will also say that's not to say that there aren't pockets around the country where there aren't double-digit increases. I mean, there are some very high-risk areas, high fire risk, higher flood risk, but having this conversation based upon the data is a really important thing. So that's one thing I do want to add.
Well, unfortunately, we are running out of time, so I want to hit a few things that are really important to us as real estate agents. Many of us, deal in condos, and that's one of the biggest factors, I think, affecting some of the sales we have in resort areas with the condo complexes. Either they're canceling the policy, they're raising the rate so much it's impacting the HOA dues, COA dues. So what can you tell us about the workings of how that works and some practical tips for us as we go to try and buy and sell these?
Yeah, no, it's an excellent question. Most of the questions I get are on condo association, homeowner association questions. So I think the challenge is this: you got two parties that have to get insurance, and they have to communicate well. So you've got a closing. You have someone that wants to buy a condo unit, and they don't find out until the servicer, until they actually get the loan, that Fannie and Freddie have some concerns or questions about how much insurance the HOA has. I think because it's a multi-party concern, it makes it a little bit more complicated. A couple of things I would say about this. First, you want to be asking condo associations questions about how much insurance they have. I mean, I think now, especially in certain markets, vacation resort homes, particularly in coastal areas or right along water areas or high-risk areas, you have to be asking. I think what they're doing is they're putting together these very complicated insurance policies, and a lender is going to want to know, is there enough coverage for this particular complex if an HOA manages 1,000 complexes? So asking some questions of the HOA up front, like how much insurance do you have? Does it cover the full replacement cost value? When was the last time you got an appraisal to base your insurance? I think those are very important questions as you have members, and I think you'll find out over time which condo complexes might be on the naughty list at Fannie. I deal with a number of these, so if you come across one of these, you have questions, you have concerns, pick up the phone, email me, call me. I can help. I can at least connect you with someone, an expert, who is dealing with this. And believe you me, you think that now is a hard market. Try Florida about 5 years ago. So those issues were navigated just fine. It was painful, it was difficult, but they got through it, and there's a lot of tricks and a lot of things that you can learn to help a client there. So I'm happy to help with that.
So from a state standpoint, are there improvements to the law that would empower homeowners to negotiate a little more? Or do you feel like that's not something that's going to happen?
So no, and I will tell you primarily that's because we don't want insurance companies negotiating rates with individual policyholders. We have a big problem in a history of something called redlining, where there was a lot of discrimination.
Sure.
So I told you about those three standards: excessive, inadequate, unfairly discriminatory. We want to make sure that everyone's charged the same rate, essentially, if they have the same risk. So we don't want that. I think the single best thing that we can do, and what I'm hoping in my tenure to do a better job of, is getting out there and helping consumers understand homeowners insurance better so that they can become a better shopper. And really, everyone should be shopping their coverage about every 3 years. That's on average, just to make sure that you're getting it. But make sure when you're quoting it that you're quoting apples to apples. Coverages do vary between insurance companies, and you want to make sure, just because it's a low rate, there could be a reason why it's a lower rate.
Right.
You're not going to have replacement cost coverage. You're going to have a larger deductible. And so it's just very important for us, I think, to do a better job of trying to educate and make them better shoppers.
So since we are not educated to the degree your department is, would it be reasonable to say, have our clients call your department until you get education out there? Or because we don't want to be responsible, right, for what people are binding.
Yep. So what I would tell you is a couple things. If you have someone who has specific questions, yes, please. 1-800-726-7390. We have a toll-free number. We're online, insurance.mo.gov. You can reach us 24/7. You can send an inquiry through. We do have a lot of resources available on the website. So there is something called a shopper's guide that you could download for free in print that actually will walk people through. I need to buy homeowners insurance. What do I need to know? Well, you need to know to call someone you have your auto insurance with, ask your family or friends for a recommendation, look online. What are they going to ask me When I call for a quote, they're going to ask you for the age or the year the house was built. They're going to ask you for the square footage. They're going to ask you if the home has granite countertops or Formica. We try to go through and walk them through what to expect so that they're prepared and can get a good quote.
Okay, thank you very much. Austin, did you want to?
Yeah,
that.
Real estate professionals are not disaster risk or insurance experts. But you can be the connection point, you can be the source of the source. So one thing I would recommend that you do is have a trusted insurance professional on your speed dial. I mean, not just someone, you know, that you may have interacted with, I mean, really, someone that you've worked with, that you have a history with. You also need kind of an Angie's List for a few kinds of things. One, you need your state insurance regulator on that list.
Angie.
It's, as soon as someone raises a concern about an insurance rate, call Angie. You also, it would be helpful for you to have risk assessment experts. There, you can find them, State Department, local department, there are emergency managers. I can help you find them. Maybe a remodeler that specializes in strengthening, hardening homes against wind and hail. Metal roofs, I know they're not quite as, but finding a small set of experts in order to address the various risks that you're facing so that you can make sure that the consumer is not asking you for the information. You can point them to an expert who can help answer their question. That way, you can add value, and at the same time, you can make sure that it's their decision and not yours.
1-800-726-7390. And the website is insurance.mo.gov.
So we want to thank you both for being here today. I think we could do a whole conference, 3 days on insurance personally, so we appreciate the
Oh,
time.
invite me back
But there-
anytime.
There is an opportunity, if you have specific examples that you want to share. Austin is going to a meeting in DC on Friday, and they're talking to the Federal Insurance Office and going to talk about ways to manage this. So if you
I think they have the QR code there.
It's
Take
very-
that QR code, fill out the survey. I need horror stories. I'm going to the Treasury Department. It's a very important meeting.
And I know some of you have those, and it takes a few minutes. I did this already this morning, but this closes on May 1st, which is tomorrow. So if you can get it done, I think it would be greatly helpful. So thank you again for both being here. Thanks, everybody.